Hello and welcome to the Voodoo free video for Monday, February 24th. This is David and let's dig in to the S&P 500. Now, in the Voodoo lines, the Voodoo Fire line is the most important of the levels. And I've been generally bullish because we have been above this level, among other reasons. But if we were continuing in an uptrend, we would expect to get above this small degree, right? Fourth most important of the levels, these Voodoo skylines, hold support above and just keep going. But late last week, we crashed back below. That is a warning and perhaps sets up a retest of this important fire line level. If we are going to see the index find support, I'm looking for a few areas. The first is going to be this 59.25 Voodoo fire line. That's what stopped the decline back here on February 3rd, almost to the penny, and sent it right back up. Right. There's also a level at 50.10. That's going to be the 61.8% retrace of the move up from this January 13th low into the late January high, right? What was it? January 24th was that high, right? It's actually 59.08 and 87 cents. And I believe if we are still heading up, then everything since that January 24th high is just working off an overbought condition from that move up, the 13th of January, the 24th of January. And so the 61.8% retrace of that advance, just this advance into here, sort of ignoring this poke higher late last week, I'd actually look to this measure, right? And then the big round number of 5,900. So if there's further to the downside to be seen, then I would look at those regions, and if from around there we recover the fire line, I would treat that as a pretty good opportunity to get long with a support or with a stop below the low. Now, I don't usually show these, and in fact, I usually have turned off these little dashed lines. These are the Voodoo moguls, right? They're the fifth most important, least important of the Voodoo line levels. We are below the lowest one, right? There are two of these moguls between that skyline we referenced and the 59.25 fire line below. We close the day below both of them. And if we stay below there, that continues to leave the door back open to that Voodoo fire line. But if we can recover both of them, you'll see that that we did get an open near this gap up open near this upper mogul, got a little bit of follow through to the upside before rolling back over here today, retested that mogul from below and failed. If we can instead get back above that mogul, then that would be the other element of rehabilitation in the index that I would look for if it's going to avoid getting down to that 59.25 level. So that's what I'll be watching for in the coming days for signs that we're turning back up, using the Voodoo lines, and of course incorporating the other elements of things that I watch in forming that view that just happens to, conveniently enough, line up with the Voodoo lines like it typically does. So I hope you find that useful. I will be back here with the Voodoo videos, including this free video, next Monday again. So I will see you then. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.